last two questions, Neelkanth. One is, and the last one is on private markets, the whole startup ecosystem, and how enthused are you with that? But before that, on the public markets, do you sense that? I heard you mention in your opening answer that while there might be a near-term cap, if you will, on what the markets do, they don't visit their highs, etc. There would be specific opportunities, themes, etc. Are there constructive arguments for secular growth over the course of the next 3 to 5 years within sectors which may do well irrespective of what the headline numbers on the markets do?
I think there are sectors like that. So I think that it may not be every real estate company in India, but when a cycle turns in real estate, I think it lasts several years. This is not generally a 3-6 months turnaround, and I think that area could provide opportunities. It does not mean that you go and buy every real estate company, because generally those are micro markets. There are different demand supply dynamics. There are corporate governance issues, and there are many other things. I also think that construction infrastructure will pick up. There is, as someone said, 80% of the infrastructure that India needs in 2047 hasn't been built yet. The financiers of that, I think, will be, so we are still overweight financials. In the near term, of course, in the next 6 to 9 months, we are trying to hide. We are trying to find places. So we have picked up domestic pharma, some utilities, some staples companies to sort of hunker down in. But if I was thinking 3 to 5 years, I think infrastructure, financials, I would say even some of the personal vehicle manufacturers, where supplies have been constrained over the last 3-4 years. And I think a recovery there could actually, and we are seeing stronger order books. Some of those themes have actually started to play out already. So all of these would be areas that I would be positive on. On the private market, there is a structural angle, and there is, I would say, a near-term angle. So in the sense that, remember that India has a problem of too many entrepreneurs with too little capital, right? And small entrepreneurs. So it's very hard to create a system where they get risk capital, they get loans, because banks struggle with issuing loans of ticket sizes 1 lakh, 50,000, 2 lakhs. Similarly, getting equity capital of 10 lakh, 20 lakhs, for historical reasons, has been a huge problem. What the boom of the last 10 years has done, it has created angel investing networks in many cities. It's not just Bombay, Delhi. It's actually in Indore and Jaipur. There are angel investing networks everywhere. The creation of that pipe, or those pipes, is a very important part of the future of India. Remember that till the year 2000, venture capital was purely a US phenomenon, and I would say even a US West Coast phenomenon. It then shifted to China. Then in the last decade has moved to India, Latin America, and this form of capital actually is very potent, especially for poor economies where per capita wealth is low, and that plumbing has historically been an issue. Having said that, given how the first wave of unicorn listings have performed, I think the adjustment of the valuations, because the private market was effectively operating in a vacuum, right? And it's an inefficient market because there is no trading, liquidity is low, so pricing tends to get distorted. And while many people are saying that this is a death knell for private investment, I don't think so. I think this is an important correction. Some people will bear losses. Some people will have burnt their hands. Some firms may actually disappear. But from a medium-term perspective, I think it's a very healthy development that we are going through right now. So in the next 6 to 9 months, maybe 12 months, maybe 15 months, I think things will be a bit subdued. But this development is actually a huge positive for the Indian economy.